Good day, everyone, and thank you for joining us once again here at Sea Freedom Brew. I am Jamie Sumner, Chief Analyst of Sea Freedom Brew, and for this week's webcast, we want to continue on our theme that we've been doing over the past couple of weeks. And today's theme about how to approach this rising rate environment that we are on that cusp is to be informed. Last week we talked about being prepared. Now we're going to talk about being informed. And it's important to be informed as we go through this process. And we're going to focus primarily on the deposit rates. And what we need to do is keep an eye on the deposit rates within inside of your market area as well as within inside of the United States. S&L Financial provides averages for the variety of different checking accounts and money markets and savings accounts, so they are a good resource to benchmark yourself against the national average, and they also do state and county averages as well. But overall, when we look at the national average and these core deposit rates, you can see there's very little change quarter over quarter and year over year. In fact, when we look at the year over year change in this column here, we can see there's about a 1 basis point shift throughout the majority of these accounts. So not that significant. And we can see for the quarter over quarter, so this is looking at the end of last year to the end of March of 2017, you can see the highest change was in that relationship money market account, just up 2 basis points. Now, within inside of the deposits, we also need to look at your overall CD rates. And these CD rates that are put out here for the national average, you can see similar movements. They've increased a bit more than what we saw within inside the core deposits, but even within this range year over year, we're up maximum 6 basis points. Of course, we don't want to stop here at the national level. You want to look at your individual market area and make sure that your rates fall within the correct range of what you're looking for. When we're looking at these rates, we also have to take in consideration where your depositor's looking. And oftentimes they're going out to bankrate.com to compile a list of rates that are out there. And you can see there's a pretty significant difference between what we find in S&L as the national average and what we're finding on bankrate.com. So bankrate.com, we're having a 1-year CD at a 1.5. That's the best rate CD that you can find out there on Bankrate. The national average is a 1.25, they're stating. We compare that to S&L's number, and you can see the 1 year is at 48. So there's a fairly significant difference between the two. It's important to keep this in mind because we want to be informed about our depositors, and if we see a trend of our depositors coming in and withdrawing those funds or even transferring those funds out into these other institutions to capture these higher rates, it's something we need to think about. And we need to then make that decision. Are we treating those customers properly? Should we be informing them that we have a product that can satisfy their need? But also be informed about the alternatives of deposits, and that would be the Federal Home Loan Bank advance rate, for example. These advance rates were taken from the Philadelphia or the Pittsburgh Federal Home Loan Bank, and you can see the change year over year has been fairly significant. You're looking here with the 7-year up 59 basis points. But if we're looking inside of those CD terms, the 1 year up 44 basis points. So that's a 44 basis point shift up from where it was last year at the end of March of 2016. So we saw those alternative rates boost up in here. So we need to take that in consideration when we're looking at our CDs. And what we don't want to do is get beyond where the Federal Home Loan Bank is setting their rates on their advances. We want to be at or below the FHLB unless we have some relationship deposit pricing that we're building in. Oftentimes, we've seen this in the past, and it's starting to creep up again more and more, where you have this nice big rate out there for a money market account or a savings account. But in order to get that rate, you have to qualify and do a certain number of things, like so many transactions within the month, and so on and so forth. So we're starting to see those becoming more and more prevalent and highlighted more and more as we move through this time period. So when we think about that, we want to be informed, keep yourself informed about the rates in your area. Look on the internet, see where they're setting their rates. Make sure you know what your alternative funding rates are, so you can make an informed decision when you're looking to grow your institution and fund your assets. That's what we have for you this week. We look forward to seeing you next week. Have a great week, everyone.